Hi students, welcome back to Commerce Veda. In the last session about branch accounting, we did branch accounting, branch debtors method, dependent branches, cost price method. Now what we should learn is dependent branches, branch debtors method, invoice price method. First of all, we should understand what is cost price, what is invoice price. Say suppose if head office sends goods costing 1 lakh to branch at 1 lakh. This is transfer at cost price. In this case, head office is sending goods to the branch exactly at cost price. There is no margin added by the head office. So that is called cost price method. Whereas invoice price has an element of cost plus margin. It can be of two types. One is percentage of margin on cost or percentage of margin on invoice value. Generally, if the percentage is on cost, it is called as markup, and if the percentage is on invoice price, it is called margin. How it can be? Assume cost 100, invoice price equals to 20% on cost. In such case, what we should do? Take cost price, add 20% on 100, which is 20. Your invoice price is 120. This is cost price, this is margin, and 120 is the invoice price. Sometimes the question may say invoice price 100 and it says margin 20% on invoice price directly given. Now if the invoice price is 100, it has two elements, margin 20%, cost 80%. So the margin is 100 into 20%, 20, and the balance invoice price minus cost price is invoice price minus margin is cost price. So directly what they said, it can be on cost or it can be on invoice price. But sometimes the question may say differently. It says cost 100, margin 20% on invoice price. Here margin is not on cost but on invoice price, but you don't know invoice price. How do you do this? You should apply a simple logic. Invoice price equal to cost plus margin. In this case, you don't know invoice price but you know cost. Cost is 100 and margin you don't know. Margin is 20% on the invoice price. It means cost is 80% of the invoice price. If margin is 20% on the invoice price, cost will become 80%. So what is margin? Cost is at 80 and what is the margin at 20? So if I do 100 by 80 into 20, I get my margin as 25 and my invoice price is 125. You can cross check margin 25 on 125, which is 20%. So always see the percentage is on what. If it is on cost and directly cost is given, multiply on cost and add to the cost to get invoice price. If it is on invoice price and invoice price is given, then directly apply the percentage on the invoice price and deduct from the invoice price to get the cost. But in other case where margin is on invoice price but cost is given, you should apply the formula If margin is 20% on invoice price, cost is 80%. You have given cost of 100, then 100 by 80 into 20, you get 25 as your margin. Hence, you add cost plus margin, you get invoice price. One more sum wherein they may say, they'll give you invoice price 100, margin 20% on cost. Now, you don't have cost, but the margin is 20% on cost. Then how do you do? Should assume cost as 100. If cost is 100, margin is 20 because 20% on cost. Hence, invoice price equals to 120. Now, what you can do? If invoice price 120, right? So 100 represents 120 here. I'll change it 1000. Okay. So invoice price 1000, margin 20% on cost. Cost margin is given on cost. So assume if 100 is the cost, margin is 20, which is 20% on cost. Invoice price shall be 120. As you know, invoice price. So cost equals to 1000 is the invoice price by 120 into 100. So 1000 by 120 into 100. So your cost is 1000 by 120 into 100. Your cost is 833.33 and your margin 1000 minus 833.33, 167.67. If you see 833.33 and on that 20% is the cost, you get exactly 1000 as the answer. So there are so many things we can do, but there is a logic here. What is that logic? Now I will be doing a simple way. If margin on cost is 20%, it means what? It is 1/5 on cost. It is 1/5 on cost and assume cost as 100. So what is your margin? Margin is 100 into 20%, that is 20. And what is the invoice price? Cost plus margin 120. Observe cleanly, cost of 100 became invoice price of 120 by adding 20% margin on cost. Cost of 100 became 120 invoice price by adding 20% margin on cost. So what is this margin? See, this is cost, this is margin, this is invoice price. Now, if I say the margin on cost is 20%, the margin on invoice price is actually 20 by 120 into 100, 16.666%. This represents 1/5, this represents 1/6. So we can be very simply do this. Here is, if margin is 1 second on cost, that is equal to 1/3 on invoice price. If margin is 1/3 on cost, it is equal to 1/4 on invoice price. If margin is 1/4 on cost, it is equal to 1/5 on invoice price. And if margin is 1/5 on cost, equal to 1/6 on invoice price. It will go as long as you go. I'll prove this. say suppose if cost 200 and I have given margin 1/5 on invoice price. 1/5 on invoice price. I have cost, but the margin is given 1/5 on invoice price. I should identify what is the margin on cost. Simple. 1/5 on invoice price equals to 1/4 on cost. So here margin is 200 into 1 by 4, 50, and invoice price is 200 plus 50, 250. You can cross check 50 margin, invoice price 250, exactly it is 1/5, hence proved. So this is the thing we should remember in the exam for easy calculation. If margin is given on cost 1/3, 1/3 on cost, if it is given, then it is 1/4 on invoice price. If it is given 1/5 on invoice price, then it is 1/4 on cost. Always remember this as a thumb rule for computing invoice price and cost price. Whether it is directly given, simple. If not, you can use this method. Right? So this is all about understanding the margin. Now we'll see accounting. What is the, how do you pass journal entries for invoice price method? What is invoice price method? HO sending goods to branch at invoice price, or we can call it as selling price. Now the first entry shall be, the very first entry shall be, I am not considering opening balances. Suppose if there is opening stock, if there is opening stock, it is at invoice price, we should remove stock reserve or loading or margin in the opening stock. So for that the entry should be, first we should write branch account debit to branch opening stock. This is with invoice price, and immediately branch stock reserve debit to branch account. This is for loading. So stock is recorded. Suppose if this is the branch account, your stock is recorded at 120 invoice price and your loading is reversed at 20. So hence the net effect on the branch account is 100, which is cost price. Right? Always debit the branch opening stock at invoice price and reverse the stock reserve. Stock reserve is nothing but profit included in the closing stock. Profit included in the closing stock. Reverse it and give a credit to branch account. So it will net off the margin. This will net off the margin. So on the debit side you show invoice price, on the credit side you show the margin. Ultimately you are showing the stock only at cost. 120 on the debit side, 20 on the credit side. The stock is actually counted as 100. So that is the logic. First entry, if there is opening branch stock, the first entry shall be branch to branch opening stock at invoice price and branch stock reserve to branch at loading. Loading is nothing but margin. You call it as loading, you call it as stock reserve or margin, it is the same. Clear? Now, After that, record all the other assets like branch account debit to branch debtors and branch petty cash. So opening recording is done. Opening stock recorded, opening debtors recorded, opening petty cash recorded, and opening loading is reversed on the other side. This is recording of opening stock and this is recording of opening assets. This will be there only if it is a existing branch where there is opening stock, closing stock last year. Now the other transactions. The next important transaction is goods sent to branch at invoice price. So when goods sent to branch at invoice price, we should write branch account debit to goods sent to branch. This is at invoice price. At invoice price. But as you know, invoice price is including loading or margin. So we should give an impact. Immediately what I should do is goods sent to branch account debit to branch. This is for loading or margin. You call it as loading or margin, same. So what I am doing, I recorded the goods sent to branch at invoice price on the debit side of the branch and I reversed the loading from it on the credit side. So my branch account actually here 120, here 20, again it is 100 cost. So this is wherever there is stock with loading, we should do a reversal of loading. That is the fundamental in this chapter. Now the next thing is branch return the goods. To head office. Here what should I do? I should reverse the entry branch. Again I should write returns goods sent to branch debit invoice price to branch invoice price, and in this also loading which is there. For that what we should do? Branch account debit loading to goods sent to branch. So like when I am sending it branch to goods sent to branch, when I am returning it goods sent to branch at invoice price, and when I sent with invoice price I should reverse the margin. So goods sent to branch only for the margin. Here returns goods sent to branch at invoice price and the margin must be reversed, which is branch to goods sent to branch. Wherever there are goods at invoice price involved, immediately there should be a reversal entry only for the loading. The reversal entry is only for the loading, so that the net impact on the branch should always be cost except the sales. Clear? Now what else the head office can send? HO send cash for expenses to branch. So this is simple, no loading involved. Cash is cash. Only when stock comes there is loading. If there is no stock, no loading. So this is similar old entry. Branch account debit to cash or bank. Amount received from head office. And then internal transactions at branch. Simply we ignore. Same like dependent branches method. Like what? Sales at branch, right? Collected from customers, expense paid by branch, returns to branch from customer, and returns to branch from customer, bad debts, discounts. These are the internal transactions between branch and its customers, or branch and its vendors, will not be recorded in branch account. As simple like your cost price method. Now comes the original question. Next one is cash sent to head office by branch. So there is a relation between head office and branch. The entry will be cash account debit to branch account. Receive the cash, credit, debit cash, credit branch account. Right? Simple, no change. And then finally, recording of closing balances at branch. Branch account debit, branch stock debit at invoice price, branch debtors debit, actual value of debtors, branch petty cash debit to branch account. Here also you have invoice price for the closing stock. Similarly, opening stock we reverse the stock reserve, right? Similarly, as opening stock on the debit side, stock reserve we reverse on the credit side. Now the closing stock is on the credit side, we should reverse the stock reserve on to the debit side. So it is stock reserve, it is branch account debit to stock reserve account. This is loading on closing stock. So opening stock, when I show you here, what we did in the opening stock we recorded on the debit side of the branch, and opening stock reserve we reversed on the credit side of the branch. Similarly, closing stock we recorded on the credit side of the branch account. So closing stock reserve we should record on the debit side of the branch account. Only closing opening we call it a stock reserve. Other than that, we always reverse goods sent to branch. Clear? Now, after this we should prepare the branch account. If credits greater than debits, profit, and if debits greater than credits, loss. So in case of profit, the entry shall be branch account debit to general P&L account, and in case of loss, the entry is general P&L account debit to branch account. The same, no change. Invoice price and cost price, the change is only with respect to accounting of stock. Opening stock, there is a stock reserve. Closing stock, there is a stock reserve. Goods sent to branch, debit, stock reversal loading. Goods sent to branch, reversal, credit. returns credit with invoice price, debit the loading on the other side. Only with stock you can get this reversal transactions. All other things are as simple as cost price method. So this is all about invoice price method. Let us take a small example for this as well. See example number 2. I am giving you information. From the information, prepare branch account using invoice price method. So what I said, opening stock at branch 20,000, invoice price. Invoice price. Opening debtors 10,000. Goods sent to branch, invoice price 1,50,000. Right here, invoice price is cost plus 25%. Clearly told, cost plus 25%. Now, goods returned to HO 15,000. 15,000. Cash sent for expenses to branch, say 20,000. 20,000. Sales at invoice price. Sales at invoice price 1,60,000. 1,60,000. Right? $1,60,000 sales at invoice price. Now, closing debtors 15,000. This is a small information I have given you to prepare the bank account. And bad debts 1,000, discount 500. This information I have given to prepare which method? Invoice price method. This is the illustration I gave. We need to prepare branch account using invoice price method. Now, how do I prepare this? I should go to first my working notes. Opening stock at invoice price is given in the question is 20,000. Loading. It says 25% on cost. So 1/5 on cost. 1/4 on cost. So 1/4 on cost equals to 1/5 on invoice price. I have here invoice price. So my loading is 20,000 into 1/5. 4,000. This is the first notes I should keep it. Opening stock. Learn loading. Second notes is loading on goods sent to branch. Loading on goods sent to branch. What is goods sent to branch at invoice price? In the question it is 1,50,000. See the question? 1,50,000. It is sent at 25% on cost, means 1/4 on cost. So loading 1,50,000 into 1/5. one fourth on cost means 1/5 on selling price. Alright, 1/4 on cost equals to 1/5 on selling price. Isn't it? 25% on cost equals to 20% on selling price. 20% selling price is 1/5. Right? So 1,50,000 into 1 by 5 is 30,000 is the loading. Then third thing I should prepare is loading on sales returns, not sales, goods returns, goods returned to head office, returned back. So at invoice price, what is the value? 15,000 is given in the question. Return to head office, 15,000. Yes, goods returned to head office 15,000. Clear? Goods returned to head office 15,000. So when it is returned, I should identify what is the loading on it. Loading should be checked only on the goods, nothing else. Now loading is 15,000 into 1 by 5 because 1/4 on cost equals to 1/5 on selling price, 3,000. Right? Now I also need to identify what is my closing stock. For that, fourth working note I should know closing stock. I'll prepare memorandum stock. Memorandum stock. Open, it is always at IP because the sum is at invoice price. So to opening balance, I say how much is the opening balance? 20,000. To goods received from head office, 1,50,000. By goods returned to head office, 15,000. By sales, how much is the sales? 1,60,000. 1,60,000. Right. Sales is 1,60,000. 1,60,000. All at invoice price. No returns in between from debtors to branch. There is no return. So I have did everything. So what is my total? 20,000 plus 150 goods returned and sales. I just want to change the sale value here. Sale value, I'm changing it to 140 for a simple understanding. So here sales is 140. So the total is 170. Here it is 155. So 170. And my closing stock balance carried down is 155 minus 170 is 15,000 is my closing stock. When I know my closing stock, I should know loading on closing stock. What is the loading on closing stock? 140, 15,000 into 1 by 5, 3,000. So identified loading on each item. Loading on opening stock, loading on goods sent to branch, loading on goods returned to head office, loading on closing stock. All the four done. Now I should see fifth one, closing debtors. Closing debtors is given in the question how much? 15,000. So when closing debtors is given, something missing is cash collected from debtors. How do we do this? By preparing memorandum debtors account. In this, to balance brought down, debtors opening balance in the question is 10,000. So debtors opening balance in the question is 10,000. To sales, current month we sold 1,40,000 current year. By returns, no returns from debtors. In the sum there is no returns from the debtors. If you see, debtors didn't return anything to the branch. Sales, bad debts and discount and closing stock is closing debtors is given. So by bad debt 1,000, by discount 500, and they said closing by balance carried down. How much they said the closing? The closing thing here is 15,000. So the balancing figure is bank collection. We'll write balancing figure. Collection. So total here is 150, and we should see 150 here. So 1,50,000 minus 15,000 minus 1,500, it is collection is 1,33,500. So I prepared memorandum stock to identify closing stock at invoice price. The memorandum stock account is prepared to identify closing stock at invoice price, and immediately from that stock I identified the loading, that is called stock reserve closing, and I prepared memorandum debtors to identify the collection, because in this question collection is given but not closing debtors is given. So missing figure is collection. So collection is ready, invoice price is ready, all information is ready. Now what I can do? I can prepare branch account to see my profit. 2. Opening balance. Stock 20,000. Debtors 10,000. I recorded my opening stock, my opening stock, my opening debtor. Immediately by stock reserve opening, we computed 4,000. Note number 1. Note number 1, I computed my opening stock reserve. So opening stock and opening stock reserve were posted in the branch account. Then to goods sent to branch 1,50,000. By goods sent to branch, the loading what we computed is 30,000. Note 2. And by goods sent to branch returns 15,000 and reverse the loading to goods sent to branch, which is note number 3, which is 3,000. Right. Then returns also done. Then you collected the cash by cash or bank, which is note number 5. How much is the collection? 133,500. So and then you take the cash for expenses. How much cash is given by head office for expenses? 20,000. So I've taken the cash for expenses 20,000. So recorded opening balances and opening stock reserve, goods sent to branch, reversed the loading, returns, reverse the loading, and recorded collection and recorded the cash received. Now I should also record by balance carried down, stock at invoice price, and debtors actuals. So debtors is given 15,000. Stock we computed is 15,000. Closing stock. This is note number 4. And the stock reserve on closing stock, which is 3,000. Note number 4. So we recorded all the transactions: opening stock reserve, opening debtors, goods sent to branch at invoice price, reverse the loading, returns at invoice price, reverse the loading, cash received for expenses, cash sent to HO. This is sent to HO. All the cash we sent back to HO. Then closing balances, stock at invoice price, reverse the loading, and closing debtors. Now if you see the total here is 4,000 plus 30,000 plus 15,000 plus 133,500 plus 15,000 plus 15,000. The total on the credit side is 2,12,500 and minus 20,000 minus 10,000 minus 1,50,000 minus 3,000 minus 20,000 minus 3,000. There is a profit of to net profit to general P&L 6,500. So this invoice price method gave you a net profit of 6,500. Let us cross check the profit. This no textbook will give. You need to understand on your own. See, sales were 1,40,000. Right? Sales has two elements: cost and gross profit. And the gross profit is 1/5 on sales. Because it is 1/4 on cost, the profit is 1/5 on sales. So 1,40,000 into 1/5, the profit is 28,000 and the cost is 1,12,000. So gross profit is 28,000. Now from the gross profit, your gross profit is 28,000 and your expenses are cash expense, which is 20,000, and bad debts 1,000, discount 500. Total expenses are 21,500. So You earned a gross profit of 28,000 and your expenses are 21,500. So gross profit minus total expense is your net profit, which is 6,500. Hence proved. Answer is 6,500. And when you cross check your sales, net of returns, no returns. So sales at a 1,40,000 sale, you should make a gross profit of 28,000 and gross profit recorded. Cash expenses received from HO, you spend 20,000 and your bad debt 1,000, your discount 500, total expenses were 21,500 as against the gross profit of 28,000, leaving you a net profit of 6,500. Your branch account exactly gave the same answer. So the thumb rule here is, when it is at invoice price, it should be only on stock. If stock is debited at invoice price, you credit the loading. If stock is credited at invoice price, like closing stock and returns, you debit the loading. So that invoice price on the debit side, loading on the credit side nets off and you get cost. Similarly on returns, invoice price on the credit side, loading on the debit side, net off, you get the cost. That is the only logic in the method. This method is very simple, as it is like cost, but whenever there is stock involved, we should always see if the stock is recorded at invoice price, loading should be reversed. Whether it is received and reverse the loading or returns and reverse the loading. Opening stock, reverse the loading. Closing stock, reverse the loading. So if you debit side invoice price, credit side loading. Credit side invoice price, debit side loading. That is the only thumb rule to understand branch account, dependent branches, invoice price method. Hope this small example helps you to understand the concept and to do the sums in the textbook which are on invoice price. Anyways, after explaining stock and debtors method, in the next session, I will give you a complete detail on sums from branch accounting, dependent branch, first three methods, which is branch debtors, cost price, branch debtors, invoice price, branch stock and debtors, cost price, branch stock and debtors, invoice price. All these four types will do some from the CMA textbook and CA textbook in the next session after explaining the stock and debtors method. To recap, what we should do is invoice price. We also learned how do I differentiate invoice price and cost price. If cost price is given, percentage on cost is given, identify the profit, add both to get invoice price. If invoice price is given, percentage on invoice price is given, identify the percentage on invoice price, deduct from invoice price to get cost price. However, if invoice price is given and percentage on cost is given, then you should see if it is 1/3 on cost, it should be 1/4 on invoice. If it is 1/2 on cost, it should be 1/3 on invoice. If it is 1/4 on cost, it should be 1/5 on invoice. If it is 1/5 on cost, it should be 1/6 on invoice. Keeping this simple logic, you can identify what is invoice price and what is loading. Loading, markup, margin, stock reserve. Names change, but it is the profit element included in the invoice price. With this, I'll end this session. Hope this session is very clear and you understood the session. You can post your comments if you have any doubts. I'll re-explain the point. If you can give your mobile number, I'll call and explain if you have any doubt. Thank you. Signing off from Commerce Mela.